Hello everyone, I hope you're doing all well. It's Dada from TradeGuardian, and today we're going to discuss the essentials of forex trading, or any other kind of trading for that matter. But we're going to use Forex as our prime example, being because it is such a popular trading platform, if you like. Everybody wants to trade Forex. It's very lucrative if you know what you're doing. And it's also very quick and efficient. It's highly traded, and that really matters. If you're trading anything, you want that thing to be moving. Whether it's upwards or downwards doesn't really matter, but moving is the key word there. So for that reason, we concentrate on Forex, and in front of it is a daily chart of Euro US dollar currency pair, highly traded, probably the most popular traded pair. Now, this is called ABC of Forex trading, and by that I meant really simple explanation of how you should or shouldn't trade. Let's start from ABC. So we're going to have three chunks. A is look at a bigger picture. This is where we start, and that's why we've chosen here a 1-day period chart. Let me explain. Each of these candles represents a whole day of trading, and right now we're on this candle, so this day only started, so this is the previous day to that, and so on, etc. And these gray lines here in between represent a month each. So you can also see on a daily chart at one glance what has been happening. First month went up, second month went up, third month went up a bit, then hesitated, fourth went up slightly more, couldn't go up anymore, and started coming down. Fifth month tried to go up again, couldn't, and it came down to here. Now, first things first, we need to know exactly what we're doing in the market. Are we buying or are we selling? And for that reason, we need to establish, well, if you're buying, what is the price that we want to be willing to buy at, and what is the opposite of that price, which we want to be selling from. So as far as this chart is concerned, you just need to look at it in terms of price and draw some lines. So without further ado, let's draw some lines in here. So I'm drawing a line at the highest point it ever went to. There. Let's make this line a different color, not to confuse with the candles, because our bull candles are also green. Let's choose something more neutral, like, yeah, chocolate will do. So why this line? Because that's the highest it went for 1, 2, 3, 4, 5 and something months. That's a whole half year, and this is daily chart, to remind you. Now, where was the price? Where else was the price frequently? So let's determine that. So here, I would say here. Why? Well, 1, 2, 3, 4, 5, 6, 7 touches, 8, and so on, 11, 12, 15, 20 times that price returned to this line here. So this is why we drew this line here. Where else price hesitated? I would draw mine just here as well, where we are now, because slightly higher actually, there, because if you look, it hesitated there, and now it's hesitating at the same place. So why are we drawing these lines again? Just to know where the price likes to stay a bit and then take off from. In which direction? We we don't know just yet until it happens, right? We're not going to predict anything. We're just going to draw more lines in. Another point I would draw a line in would be this. Why? Because went up, hesitated, and then took off from there. So that for us should be a very good buying price. And the opposite, the top line, should be a very good selling price. In between these two, we are right now in the middle. Okay, so let's recoup. We went to 1 day period chart, daily chart as they call it, where each candle represents a whole day of trading, and we drew our lines. The top maximum the price went to, the bottom that we can see that it came from, and any of the medium ones. That is the A of ABC. Now let's move on to B. B would be you basically move down to a lower time frame just by one. So if we are looking at 1 day chart, we're moving down to 4 hours, 4 hourly charts. And you can see that our lines are still there. Now we need to add more lines in according to our 4 hours. Let's make them different colors. So again, we start from the highest that the price went to. Let's put it there because line is stronger if there are more candles touching it, and that encompasses this high and also this high. Now because this is a 4 hour chart, we're going to make them different colors. So let's choose, I don't know, let's choose blue. And that'll be our 4 hourly. Where else would you draw a line here? Well, I could just leave it as it is. There are no more lines here. That's the B. So we're dissecting it from daily to 4 hourly, and now moving on to C, 1 hourly chart. And this is where we are now. And we are directly on that line, as you can see, which we drew on our, go back to, daily chart here. That seems to be a good support line because price is not trying to go, I mean it tried hard, but it couldn't go further down than this line. So that could be our buying zone. Now where we do our buying and selling happens on the lowest of our time frames, because remember we're using daily, 4 hourly and 1 hourly. So lowest in our case is 1 hour time frame, and here we are, 1 hour time frame. We saw a rejection from below and the price returned to here. Now let me introduce a really good way of determining where the price is if you do not have enough patience to determine it yourself. You could always use the most simplest ways, which is a moving average, and in this case we're going to be using the very famous 200 exponential moving average.
Incoming mail.
And oops, sorry about that, some mail coming in. And we're going to make it some other color so we don't confuse it with the other ones. Let's make this one yellow just for the sake of it, just to see it. Now as soon as I drew it, you see this line here. This is our 200 exponential moving average. This will actually determine our overall trend. If it's looking down, sloping down, on this time frame we are in a downtrend. But don't be confused and always look at the higher time frame. Now if we switch this up to daily time frame, here's the same 200 moving average, and guess what it's doing? It's looking up. So if you were to approach your charts just by one time frame, let's say 1 hourly, you'd probably be tempted to sell this because look, the moving average, the trend is looking definitely down. So let's remind you, and you'll be mistaken. Let's remind you why. What do? ABC of trading. We start from daily, high time frame. We determine our trend, hence the moving average. Is it looking up? Is the trend looking upwards? Yes, it is. Just by looking at that line, you can say it is. Now, we drew our lines in to actually understand where the prices are bouncing off from. And it's also called something support and resistance, but I'm going to try to explain to you without much terminology. So support and resistance also means the same, that the price frequently went there and got rejected. So it's a good landing platform to start your trades from. And that's it for now, for this part 1. And we will carry on very soon with part 2, where we'll go into more details of how you can utilize this knowledge and expand your ABC knowledge of trading down to the finer detail. Cheers, thanks for watching, and ciao for now.